Good morning, traders. It's Carlo from Blueberry with the week ahead. It is Monday, the 3rd of August, and three events are top of mind for traders. One, dollar yen. Dollar yen, as you can see, the chart in front of me has collapsed 700 pips since late Thursday on suspected joint central bank intervention with the Bank of Japan and the Fed in the United States. We're yet to hear an announcement or a proof of that, but it has been heavily suspected from analysts globally. Secondly, is the continuing US-Iranian war a key driver of energy prices and inflationary expectations? And thirdly, US second quarter earnings. Quick look at the charts. Dollar yen, as you can see in front of me, has collapsed. You can throw your technical levels out the window when things like this happen. There is talk that there may be an announcement today from the Ministry of Finance in Japan that they may actually confirm joint intervention with the United States, US Treasury. If that is the case, that is a big deal. So please wait for any comments out of the Ministry of Finance in Japan. Now, dollar yen is a currency pair which has always been very volatile. 700 pip move is not uncommon for an old trader like myself. We've seen this time and time again. We could see dollar yen fall to well below 150 in the space of 1 or 2 days or less, or bounce back to these EMA levels right here. So it's and that's impacting, if you're trading sterling yen, Aussie yen, Kiwi yen, CAD yen, they've all been hammered in line with this suspected central bank intervention. What else is news right now? Oil prices, of course, have increased dramatically in the month of July. We're currently above $80 for both West Texas and Brent. Gold price, go to the gold chart, and gold, you can see, has been falling back to that 4,000 US an ounce mark. It's always found support around here. You can see in the month of July, it's actually gone sideways between just below 4,000 to about 4,200. And equity indices are also quite mixed. US equity market indices are holding up, whereas the Nikkei 225 has fallen in line with increasing oil prices. So higher oil prices has a negative impact on Japanese stocks, given that Japanese companies are, and Japan in general, is a net importer of oil and energy, such as gas, etc. Let's take a look at the data right now. As mentioned, US-Iranian war enters its 24th week. So as always, it is a key driver of oil prices and inflation expectations. In terms of data, key data this week, pretty light. Traders will be likely focusing on PMI data out of Germany, UK, US, which is expected to remain above that 50 expansionary level. We do have the ISM manufacturing PMI data on Tuesday in the United States, quite a healthy 54, showing the US economy is in good shape. Wednesday, the meeting minutes out of the Bank of Japan will be quite interesting, given the very strong drop in dollar yen and the Nikkei 225 weakness. On Friday is where all the key data is. So we do have German trade balance, but over the page, it's US non-farm payroll. So again, another key economic data input. So you know that last week the Federal Reserve kept rates on hold between 3.5% to 3.75%, but they're waiting and watching. And not only is inflationary data important to them, but employment growth. Market analysts are forecasting an increase of 88,000 new jobs. Canadian employment change is also out, an extra 15,000 jobs that'll likely impact the Canadian dollar. And then another key event throughout the whole of this week is continuation of US companies reporting their second quarter earnings. Some of the key companies reporting that are SpaceX, AMD, Berkshire Hathaway, Palantir, Uber, and Pfizer. So you can imagine impacts on US equity indices. That's it from me. Good luck with your trading, and I'll see you in the next video.